Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is Friday, August 18th. I know I don't typically do videos on a Friday, but I've been gone the past couple of days and the market has really taken a nosedive. So I thought I'd throw one in this evening. I just got back from a trip for work. So apologies for being gone for a little bit, but that's just life. Sometimes I've got to be away. I was up in Marquette, up in the UP for business. This week for my company, we have an office up there, so I was taking a look at that. We're going to be doing some work up there probably either later this winter or first thing next spring. But that is not what you're here for. We are going to take a look at John Deere. This one always seems to be at a premium, but today had a nice little drop there, so we'll see if there's any value there. Let's jump into the video. So if you want to know more about this company, go ahead and check them out at www.deere.com. That is www.deere.com. That is their homepage where I pulled this information from. A couple high notes: 52 billion in net sales and revenue, 82,000 employees. They are 84th out of the Fortune 100 companies here. Our history: our founders' formula was simple: see a need, innovate a solution, then keep innovating to make our product even better. From our revolutionary steel plow in 1837 to our smart machines and precision technology of today, we've never stopped improving for good of the people we serve, and we never will. Interesting here, if you were to go to their homepage, you could find, click on each one of these and kind of go through the years and see how they've progressed over time. Again, they started out way back here in 1837. Blacksmith John Deere creates an ingenious steel plow. The innovation became a commercial success. So it all started with a steel plow back in the day when they were still pulling them with horses. And then obviously they graduated into machines. The first tractors. Today they do primarily tractors for farmers, as well as lawn tractors for your lawn, riding mowers, that sort of thing. You're probably aware of them. They do some commercial construction equipment as well. They are a manufacturer of those type of plows, tractors, that sort of material. And let's jump into the real fun stuff, why we were looking at them. Down on the day, 5.28%. We are talking about Deere Company, ticker DE. This is out of the industrial sector. They closed out the day at $397.02. Again, down 5.28%. 52-week range as low as $328.62, as high as $450. So they are kind of floating mid between that low and high for the year here, even though it'd be nice if they dipped down a little bit further, headed back under, well, at least they're under 400 now again, right? But not quite at that 328 low. Average volume 1.6 million. Today was 4.2 million, so a lot of volume today. Market cap of 116.403 billion, a beta of 1.07, so they are more volatile than the overall market. Price to earnings ratio, PE ratio, at $13.35 per share. Earnings per share very high here, $29.74 per share. Very, very high earnings per share there. Earnings date is August 18th. So that was, maybe you'd look at the news for today and see what was going on with their earnings. Did they miss on their top or bottom lines, or both possibly, or did they adjust their outlook going forward? That may be part of the reason. Anytime you have an earnings, you want to watch what's going on. Positive or negative can make a pretty big swing. Forward dividend is $5 paid out on the year. They are a quarterly payer. We'll see that here in a little bit. They have a low dividend yield, 1.15%, but that's all right if they have a lot of room to run. We'll see that here in a little bit as well. Ex-dividend date, June 29th. Looks like they will pay out, or did pay out, on August 8th. So if you were, since we're past this August 8th payout date, if you were to buy them now, you would be in line for their next dividend payout. And Yahoo Finance has a one-year target of $450.59. So it doesn't, well, it looks like they're expecting them to crack their 52-week high again, right back up to 450, just above that, really. Now, I like to jump into statistics, look at dividend yield theory. To do that, again, you'd go to statistics, go down to dividend and splits, look at their 5-year dividend average of 1.4, compare it to their current 1.15, or over here forward 1.15. It's the same, and it is lower. So this one speaks to some overvaluation for this one. If this number was higher than their 5-year average, that would speak to some undervaluation. It's inversely correlated, right? Comparing their 5-year average to their current is an inverse correlation. So if it's higher, that means undervaluation. If it's lower, that means overvaluation. And in this case, it is lower. So again, overvaluation. Now, very low payout ratio on this. So even though it has a low dividend yield at 1.15%, very low payout ratio, 15.84%. So they have a lot of runway to and room to continue to increase this dividend over time. I also like to look under financials. You'll find a lot of good information there. You can check out their balance sheet. You can check out their income statement. Check out their assets over liabilities. Are they paying down debt? Or is their revenue growing from year to year? That sort of information. I like to look at free cash flow. We want growing dividends, right? We want this payout ratio to continue to not necessarily increase over time, but this dividend yield to increase over time. So we look at free cash flow and see if it's growing, because that's what dividends are paid out of. In 2019, we're in the negative 37 million here. 2020, big jump up. They must have had some paid down some debt or had some write-offs here. Something with this cash flow definitely. Or right here, repurchase stock, 1.2 billion worth shares of stock. So that may have been part of it, because in 2020 they have very nice positive cash flow of 4.8 billion. 2021 up to 5.1. 2022 under a billion here at 911 million. But again, look, they jumped way up and bought more of their stock. That's what this line is, repurchase of capital stock. So they are buying back their shares as well. See how they're lower here with their repurchase, so their free cash flow is a little higher, even though they were pretty nice on free cash flow and buying back shares. Overall, buying back their shares is a good thing. When companies do that, it makes you as a shareholder own more of the company without adding any capital. And obviously, if you're adding capital, it's even more, but you want companies repurchasing their stock. That is a good sign to see. And they do have overall from 2019 to 2022 growing free cash flow, even though it decreased from 2021 to 2022. Like I said, an increase in the purchase of their own shares. I am okay with that as a reason for them to have lower free cash flow. Now we will jump over to stockanalysis.com. I'm not affiliated with stockanalysis.com either, but I always recommend more than one source so you can back check the information you are getting is accurate. And according to stockanalysis.com and the 18 stock analysts they've had take a look at this, they call it a consensus buy. They have a low estimate of $367, which would be a 7.56% decrease in the stock price from where it currently sits. Average estimate of $461.17. This is slightly higher than what we saw from Yahoo Finance, but pretty close to their $450 estimate over the next year. And this 461.17 would be a 16.16% increase in the stock price. And if it happened to hit their high of 582, not only would that be a new 52-week high, that would be a 46.59% increase in the stock price. All the while, you could collect that just north of 1% dividend yield, which again is pretty low, but they do have a low payout ratio. Now, if you look under statistics here, a lot of the same information, actually the same information, and it goes back even further than Yahoo Finance. Again, you can check their balance sheet, their income statement. I like to look at return on equity, ROE, and return on invested capital, ROIC here. I like 10% or better, or in line with their industry average. Their return on equity, 43.1%. Very, very nice there. And the return on invested capital, just under the 10% that I like, 9.90. I'm going to give it to them and say that's close enough. I'm not going to split hairs on that. When I want 10% or better and they're at 9.9, I can live with that as well, especially if they have a return on equity of 43%. Very, very nice numbers overall here. Now let's jump over and look at their dividend. Again, we want growing dividends over time, and they are doing just that at 12.85%. So very fast growth on their dividend, which with a low dividend and a low dividend payout, again, payout ratio of 16.81. I think it was showing 15% on the other page, close enough. Again, not going to split hairs here. Under 20%, well under 20% here, and double-digit growth. So with a 1% dividend yield, if they continued this growth, that is very nice growth, even though you are starting at a lower yield. And if you were to watch them and continue to see if they pulled back and get them at a cheaper price, you could maybe get that back up to their 5-year average, 1.5, 1.6, 1.7 even. I went back to 2020. They were paying 76 cents here. Jumped it up into March 2021 to 90 cents. I'll bet they jumped it up. Actually, they jumped it up again in September of 2021 to $1.05. They jumped it up to June to $1.13 of 2022 to $1.13. December of 2022 up to $1.20, and then March of 2023 up to $1.25. So they have been aggressively raising this dividend. A couple years here, they're raising it twice a year. So very nice dividend growth, low payout, but if they were to continue at this 12.85%, I think this would be a good one to get in if you were a younger investor looking for that long-term dividend growth with a under 20% payout ratio. Very nice one here. The only thing I don't like right now is the valuation. I do feel it is slightly overvalued. If you could get it, that 367 that we saw for stockanalysis.com or even under that, that would be ideal, closer to that 52-week low. Under 400, starting to get there, but I think it still needs to drop a little bit more for it to be fairly valued, and you really want a little bit of margin of safety. So if you can get it under 5, 10, 15% or more under fair value, in which I would say probably around that 367, 360 range and under is where I would be interested in this one. This is the vested interest stock screener. You can pause this and go through this at your leisure. This is how I set up the videos as well, and it's also how I take a look at a stock and a company to see if I'm even interested to do a deeper dive. If I am interested and it meets the criteria I've set out here, then I will look more into the financials of the company, look at their revenue, look at their earnings, all that, look at some of the forecasts they have out into the future. So this is not the end all be all. This is just on a high level, whether to look at a company and see whether I'm interested in it at all to begin with. Well, that is it for this one. Let me know what you think of John Deere. Is it in your portfolio? Are you adding to it now, or are you waiting for a further drop? Love to hear from you. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. It really helps out the channel. It helps out a smaller YouTube channel like me. It doesn't cost you a thing and helps with the YouTube algorithms. Join the vested interest community. Join us on this journey to financial freedom, building a community of like-minded dividend growth investors so we can share our experiences, stocks like this that we may be buying or may be watching, or stocks that we should be avoiding altogether. MPW, I may be doing another video on that one based on some recent news, so maybe some stocks to avoid out there as well. We can share our experiences. We can't necessarily benefit from each other's investing, but we can benefit from our investing experiences. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a stock like John Deere you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk against money. Should never invest any amount not comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.